Hello, I'm Steve Farouk of Finextra. We're here at EBA Day and I'm joined by Robert McKay of Bankers Accuity. Thanks for joining us, Robert. Now, the talk today is a lot about Sepa. So my first question is, what are the biggest hurdles of Sepa compliance?
Well, certainly, I think there's perhaps at least three that present corporate with things to consider, certainly challenges. They include mapping their stored payment details, often in BBAN or national domestic formats, into IBAN and BIC. There's the matter of the message formats, converting legacy or proprietary formats to the ISO XML 20022 format. And finally, if there's any debits that they have with their customers, revisiting those mandates and perhaps re-exchanging those with those customers. If we pause for just a moment on each one of those, there are some unique challenges that exist in each one of those areas. If we consider a corporate that has a massive supply chain, vendor network, employees, if you will, often those payment details are stored in vendor masters and bank master tables in their ERP systems like SAP. And re-engineering those BBANs to IBANs, for example, is not necessarily an easy process, and certainly is one that could disrupt payment flows to employees and supply chains. That could be problematic for a business. The mandates certainly is a legal and regulatory issue that needs to be considered carefully. And finally, the XML conversion might be viewed as simply a technological enablement. Certainly a corporate needs to have a conversation with their banking partners to see if those are services that they could already be providing.
So what must a corporate consider in a project plan to become compliant with Sepa?
To meet the Sepa end date in February, it's not as easy as just simply flipping a switch in one day. Usually the corporates that we've been working with very closely have had project plans that have been in motion for many, many months. These include planning exercises that span weeks indeed, especially if there is a significant number of records that need to be converted or a sizable customer base that has to be kind of thought through. Then there's the actual coding to the systems, converting the stored payment details from where they exist today, or the interfaces that interact with customers as they onboard these payment details and stored values. And certainly that's an effort that could take 6 to perhaps 12 weeks. And no project should be rolled into production without proper testing that also takes into account what might be unexpected issues and fail rates, like any plan that has. I would argue that corporates that aren't in motion already are a little bit late to the game, if in fact they have an intention to meet the Sepa end date.
So what are the roles of banks in Sepa, and how does this present new opportunities for serving their corporate customers?
Certainly the bank-to-bank payment flows for Sepa have been in place for many, many years. And in fact, many banks would attest to themselves being Sepa compliant in their ability to do credit transfers and debits as well. Where there perhaps is still a gap to be filled is that experience with their own customers, and more principally, the largest corporate customers, as they might represent significant volumes that yet to be converted. It's one thing for a bank to address their own account holders and make sure that that's in place. It's a materially different matter when they start considering processing the payments that their customers are originating to go to beneficiaries somewhere else. Many corporates have started to approach this to provide services to help, for example, convert BBANs into IBANs to prepare those vendor master databases, either through services that they create themselves, white labeling of technologies that they host on a bank platform, or introducing their key customers to a trusted partner that can provide these services in time to meet the conversion.